Coupang Inc. is trading right now at $22.80 USD on the New York Stock Exchange, showing a modest intraday climb of 0.37 points or 1.65% as the market processes the final trading week of December 2025. While that green figure on your screen might look like a standard post-holiday recovery, there is a massive gap between what the ticker says and the reality unfolding behind the scenes at the Seoul headquarters. Most investors look at Coupang and see a dominant e-commerce titan that has finally found its footing in terms of profitability, but what they are missing is the legal and regulatory storm that just touched down on Christmas Day. While you were opening gifts, a massive securities class action lawsuit was filed against the company, and the South Korean government has officially opened a special tax probe following a data breach that affected over 33 million accounts. This is the classic tension between a company that is fundamentally winning on the ground and a corporate structure that is currently tripping over its own feet. If you are looking at your individual brokerage account today, you might be tempted to think the worst is over because the price is holding steady above $22, but history shows that the market often has a delayed reaction to complex legal filings and foreign regulatory pressure. Many people view Coupang as the Amazon of South Korea, assuming that because it has captured the market, the stock will naturally follow the trajectory of something like Apple stock or Nvidia stock. They expect a linear path to the top. The reality, however, is that Coupang is operating in a much more aggressive regulatory environment than its American peers. The recent resignation of the head of their South Korean unit isn't just a simple executive change, it is a signal of a deep internal crisis following that breach. When a company loses the trust of nearly two-thirds of a nation's population regarding their personal data, the cost isn't just a fine, it is a long-term erosion of the brand that Rocket Delivery spent a decade building. The recent trading volume has been telling a story of institutional caution. We are seeing significant shifts in how big funds are positioning themselves in CPNG. While some see this as a buy-the-dip opportunity, similar to how retail traders flock to Tesla stock during its more volatile periods, the sophisticated players are looking at the SEC investigation into whether Coupang timely reported the material impact of their November security incident. This is where online investing becomes a game of nerves. If the SEC determines that management sat on this information while insiders or institutions adjusted their positions, we are looking at more than just a temporary price dip. We are looking at a fundamental questioning of corporate governance. This is why having proper investment help or using a robust platform like Fidelity or the Interactive Brokers platform is vital. You need more than just a price feed to understand these shifts. Let's talk about what is actually happening on the ground, because the business itself is still a powerhouse. In the third quarter of 2025, Coupang actually beat expectations. They delivered 18% year-over-year revenue growth, hitting over $9 billion. That is a staggering number for a company that many thought had already saturated its home market. They are even seeing gross profit margins expand, now sitting near 29%. This is the expectation part of the loop. Investors expect Coupang to be a money-losing growth machine forever, but the reality is that they are becoming a highly efficient, cash-generating business. They even repurchased $81 million worth of their own shares recently. You don't do that if you think the ship is sinking. However, the market is currently discounting that operational success because of the cloud of litigation. The core of the Coupang model is its end-to-end logistics network. Unlike many other investing sites that just list the financials, we need to look at the physical reality of their Rocket Delivery system. They own the warehouses, the trucks, and the last-mile delivery. This allows them to maintain a level of control that even Amazon struggles with in certain regions. This vertical integration is their moat. It's why they can promise delivery by dawn for an order placed at midnight. This year, they've started to export that model to Taiwan with surprising success. Management is reporting triple-digit revenue growth in Taiwan, and they are building logistics centers there at a pace that mirrors their early days in Korea. For those who do self-investing via the Robinhood app or SoFi Invest, this Taiwan expansion is the most important developing offering to watch. It represents the proof of concept that Coupang isn't just a one-country wonder. Comment below how many shares of Coupang you currently hold, or if you think the data breach is a deal breaker for your long-term thesis. When you look at the broader sector, Coupang is being weighed against other high-growth tech names. If you're using Schwab Intelligent Portfolios or a SoFi Robo-Advisor, you might see Coupang tucked into international growth categories alongside some of the bigger Chinese e-commerce players. But the comparison isn't quite fair. Coupang doesn't face the same level of delisting risk as some of its neighbors, yet it is currently trading at a significant discount to its analyst price targets, some of which sit as high as $36. The gap between the current price of $22.80 and that $36 target is where the opportunity lies, provided they can clear the legal hurdles. The institutional activity in the last few sessions shows that the smart money is divided. We've seen large blocks of shares moving through Interactive Brokers Trading and the Fidelity trading platform, suggesting that while some are fleeing the legal risk, others are looking at the price-to-sales ratio and seeing a bargain. Coupang is essentially trading at a fraction of the valuation multiples we see for other tech giants. If you compare the revenue growth of Coupang to something like Apple stock, Coupang is actually growing faster on a percentage basis, yet its P/E ratio is often viewed through a lens of extreme skepticism because of its past history of heavy losses. There is also the far-fetched factor. Coupang's acquisition of the luxury fashion platform was a bold move that many analysts initially hated. They saw it as a distraction from the core business. But the reality is that it gives Coupang a foothold in the high-margin luxury space, which is exactly where they need to go to keep expanding those margins. If they can successfully integrate Farfetch's global reach with Coupang's logistics efficiency, they could create a luxury delivery experience that doesn't currently exist. This is the kind of deep value that doesn't show up in a quick scroll through the Robinhood Investments tab, but requires a bit more technical analysis on a Fidelity brokerage account or Interactive Brokers account. Looking forward to 2026, the catalysts are clear. First, we need to see the resolution of the South Korean tax audit. If it results in a manageable fine and no major changes to their business practices, the stock could see a massive relief rally. Second, the performance in Taiwan needs to stay on its current trajectory. If Taiwan becomes profitable sooner than expected, it proves that Coupang's model is a portable technology, not just a result of South Korea's unique high-density geography. Third, we have to watch the WOW membership program. Just like Amazon Prime, this is the sticky glue that keeps customers from switching to competitors. They recently raised prices for this membership, and so far the churn has been lower than many feared. This shows incredible pricing power. The risks, however, are just as tangible. The cybersecurity lawsuit is a major headache. The allegations that the company delayed reporting the breach to the SEC are serious. In the world of online investing, transparency is everything. If the market loses faith in Coupang's willingness to be upfront with shareholders, the valuation multiple will stay depressed no matter how many packages they deliver. We are also seeing increased competition from Chinese platforms like AliExpress and Temu, which are aggressively targeting the South Korean consumer with ultra-low prices. Coupang has the advantage of speed, but those competitors have the advantage of price. It's a battle of I want it now versus I want it cheap. For the individual investor using SoFi Active Investing or a Fidelity mobile app, the strategy here depends on your time horizon. If you are looking for a quick trade, the volatility from the lawsuit might be too much to handle. But if you are building a long-term position in your Fidelity IRAs or through a Robinhood stock trading account, you have to ask yourself, does a data breach change the fact that Coupang is the infrastructure of South Korean life? For most people living in Seoul, Coupang isn't just an app, it's the way they get their groceries, their electronics, and their clothes. That kind of cultural dominance is hard to break. In terms of market mechanics, we are seeing a lot of activity in the options market for CPNG. There is a high volume of put options being bought as a hedge against more bad news from the tax probe. This suggests that the current $22.80 price might have some floor support, but investors are clearly worried about a gap down if the South Korean regulators get aggressive. If you are using an advanced platform like the Interactive Brokers platform, looking at the implied volatility versus historical volatility can give you a clue that the market is expecting a big move in early January. Comparing Coupang to the Magnificent Seven like Nvidia stock or Tesla stock might seem like a stretch, but in its own region, Coupang is just as dominant. The difference is the home court risk. While Nvidia sells to the whole world, Coupang is still heavily tied to the South Korean economy. This makes it sensitive to the Korean won's exchange rate and local interest rates. However, with the Federal Reserve likely shifting its stance in late 2025, a weaker dollar could provide an accidental boost to Coupang's reported earnings when they convert their Korean revenue back into USD for their SEC filings. As we wrap up this analysis, it's important to look at the big picture. The expectation was that Coupang would cruise into the end of 2025 on the back of its Q3 earnings beat and strong holiday sales. The reality is that they hit a wall of legal and regulatory challenges that have complicated the narrative. At $22.80